Hello traders, this is Sid Norris from Elliott Wave Plus. The purpose of this video is to show you an example of how I combine Elliott Wave and Hurst cycle analysis to create improved market forecasts. First, a little introduction. I've been a trader and investor since the mid-1980s. During my entire career as a market technician, I've continually searched for new and better ways to predict market turns accurately. In 2011, I started sharing my Elliott Wave market analysis with subscribers. In 2013, I started integrating Hurst cycle analysis into my wave counts. Since then, I've gained a lot of experience related to combining these two robust market analysis methodologies. Elliott wave theory and Hurst cycle analysis approach the market in very different ways. In my opinion, they complement each other perfectly. For example, Elliott wave provides Fibonacci price targets, but offers little regarding how long it will take to reach those targets. Hurst cycle analysis provides projected dates for reversals, but offers little regarding how far price will stretch during each swing. Combining these two independent methods provides a much more complete picture of price and time, therefore creating higher confidence, less subjective market forecasts. I'd like to show you an example of how Elliott and Hurst complement each other. But first, let's review a very basic concept at the core of Elliott wave theory, and that is that a progress or trend occurs in 5 waves, and then regress or pullbacks occur in 3 waves, as shown here. Now let's look at that pattern using a real price chart of silver. As you can see in the example, silver moved up in 5 waves and then corrected in 3 waves. Many mainstream Elliotticians would label this as a wave 1 or A to the upside, followed by a potentially complete wave 2 or B to the downside, as shown here. But the 3-wave correction was admittedly fairly brief in comparison with the duration of the 5-wave up structure. So the question is this correction finished, or will it extend somehow and eat up more time before the uptrend resumes? For the great majority of Elliott wave practitioners, there's simply no high confidence answer to that question. In the real world, sometimes pullbacks are brief, and other times they are not. Here's what really happened next. The correction in silver lasted 2 more weeks. Using Elliott wave alone, this simply could not have been predicted ahead of time with high confidence. This is an example of how Hurst cycle analysis made a real difference in the accuracy of my forecast for Elliott wave Plus subscribers. This is the actual screenshot I sent out to subscribers in mid-April. Notice that Hurst cycle analysis was projecting that the correction that had just started would more likely continue through about the end of April before strong upside would resume. This is a big deal. Elliott wave, when used alone, is simply not equipped to provide this kind of wave duration forecast. Ultimately, the correction did continue through the first few days of May. That was followed by a very strong and quick upside move, which clued us in that the sideways correction that Hurst analysis so ably predicted was very likely a triangle, and the upside move that followed was likely a terminal thrust from that triangle. This is where the pattern recognition aspect of Elliott wave was able to take over, and a relabeling of the waves was necessitated. If the sideways movement during April was a triangle, in Elliott wave, triangles cannot appear alone in a wave 2 position, So the move up from the March low was very likely an ABC zigzag. Notice that Hurst was projecting a 40-week cycle peak in the second half of May here. All I showed you today were two actual screenshots of my silver analysis, one from mid-April and one from mid-May. Those two screenshots showed the difference our analysis can make for subscribers. Subscribers at Elliott Wave Plus actually receive multi-time frame screenshots of a long list of tradable items twice each week. Two subscription levels also include a weekly webinar where I take time to explain my forward roadmaps on those many items in great detail. Here at Elliott Wave Plus, we combine Elliott Wave theory and Hurst cycle analysis on virtually all coverage items. We know now, after many years of doing so, that the sum of these two great, robust methodologies is greater and more complete when they are used together. Thanks for watching. See you soon. Bye-bye.